The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technician's Hour from another beautiful day. A little cool yesterday. I was a little surprised about that because evidently I had one of the 20 magnificent days the day before. I didn't realize that it was unusual. Everybody kept saying, what a beautiful day. I said, what am I talking about, a beautiful day? Don't you always get it? And I guess not here in San Francisco. But it's very sunny, no rain, so it's going to be very nice. Now, let's go through a couple of things. In the ChapmanWave methodology, what you always look for is you look for a most identifiable low bar. And from that methodology that I developed over 20-something years, you need to look for 4 higher peaks. That's how simple it is. 1 penny higher than the previous left side peak starts the new leg up. And it's called the floating letter. You keep going up on that letter until it makes what's called a peak. And what is a peak? A peak means if you've got a lower high bar. The whole bar itself is lower than the previous bar. Doesn't matter whether it's a 1-minute chart. Doesn't matter whether it's a monthly chart. Doesn't matter whether it's the an index at 9,533.00 and it goes to it makes a lower high bar of 0.01 lower. That's all you need. Now I just lost what I needed, which was to give you all the numbers. I thought that would be great today. I'll just run the numbers straight away. They just disappeared from in front of my very eyes. Well, that doesn't matter. You know what I can do here? Let me just give you briefly until I get them back here. The Dow is down 73. Now, you remember I was just talking about the peak D. This is what I said to my subscribers on my opening call. I said, got to be a little careful here. Why? Because we've got, I didn't have time to elaborate. This was like very late last night so that I could get it out early this morning. I said that there was a peak D in the 120-minute chart, trough D in the VIX index. So what happens, and not only that, there was a beautiful little doji candle, which is often a reversal signal. So on the 120-minute chart, we've got a peak peak D. That peak D at 14,887, just let me double check that I got the number correct. Give me 1 second. Yeah, 14,887 in the Dow corresponds to a low of 12.18 in the volatility index. Where's this volatility index now? Spikes up to 13.09. Some bad news, some bad economic news, disappointing. Let's call it disappointing economic news. The daily charts are at a very interesting point here. I've got the Dow, and I'm calling it a peak C for now. It could be a G/C, but at least for now I'm calling it a peak C. And that means, theoretically, remember what I was telling you, we should go to at least a peak D in the waveform, except when you have these parallel wave counts. And when you're getting to a second buy mode, which this basically is, it's actually a third buy mode, that's when you start to get a little stretched. And my anticipation has been that somehow or other, based on the MACD and the stochastic, even though we should expect pullbacks right here, quite a whippy action, the Dow, and I'm going to go to the chart in a moment, the Dow will show that we've got some very interesting aspects and perspectives that we can focus on at this particular point. And it says that there is still internal strength, enough internal strength to go for, I could be totally wrong here, but to be going for about another into next week. It might even sneak into the following week. I don't. It depends on how we close today and where we are. Because after all, it's been straight up days for 4 or 5 days. You've got to expect some kind of a pullback. So on a short-term basis, yep, you could have gone short. We actually added a short position to my opening call. Being very fortunate because even this is very much stock selection. It's very focused and a stock selection. So that's really what I'm keying in. Just I mentioned yesterday we were very fortunate. We had one stock that was up 18%. That stock is up another 6%. It was up earlier, another 6%. So let me go through the numbers. The Dow is down 64 at 14,800. The S&P is down 11 at 1581. Combi Index is down 28 at 3272. Gold is just getting, whoa! Gold is getting smacked. It's down 63 at 1501. And silver is down $1.50 at 26.20. That's that dreaded H pattern that becomes an M pattern, and then that the right side low bar just slices through the left side. Major support that's been there. We've been looking at the GLD. If the GLD, I said, was breaking under 147, the 148 has been tremendous support. When it breaks under that, it's kind of an empty hole underneath there. Now we've got bonds up $1.08, so $1.08. Crude oil's getting smacked. It's down 90.48. Platinum's down 44. And, oh, my goodness, the copper is down 9. Hey, this could not be good. We might be getting a peak F and a peak G in those daily charts. However, the day is young, and this is really a commodity-related pullback. But it's a commodity-related pullback, meaning that it's really important to focus on copper, because if copper... Let's go to that chart right. No, we had a caller, and I believe he couldn't wait online. And he is asking about Ben in Tallahassee. So I believe you had to get off, but your question was WFM Whole Foods Monthly. So you know what I'm going to do? Let me do this right here. Click, and then come right back again. Now, this is something that always worries me a little bit. The short-term trading index is only at 1.35. No, let me put it this way. This is something that can worry me. At this particular point, I see something that's very parallel to the market. The trend is at 1.35. If a trend goes to quite a bit higher, about a point higher, say, because the market closes at the low, and on Monday it goes deeper, then what I'd be looking at and saying, okay, there are a couple of things happening here that if they don't transpire by Tuesday, and that is that there's a really strong bounce by Tuesday, then I've got to take this seriously. But at the same time, it's just we went through this on Wednesday night when I met with all the Tigers here at the Marriott in San Francisco, and we were looking at these various charts and how some of the stocks, key stocks, had acted so well. So let me do this. The question, I'm going to go to my first questioner, first caller, Dan in Tallahassee. You asked me about. I'm going to go there right now. Do it right this second, because you know that I might forget. Get carried away with my charts. I just love charts. So let's do this. Click. They're a little slow. So let me just also say I'm looking at the IWM. If you're looking at my charts on Tiger TV, the one in the middle here is, I was talking about those peak Ds. You remember how important? I could not tell you. I've been trying to add them up over the period of about 4 months. How many times I've shown, just here in the den, let alone my own work, how many times in the 120-minute chart we have got peak Ds that have made serious tops, either time, either price, or both. Here's another one. The IWM, which is the Russell 2000, goes from 89... give me a second. Yeah, I'll tell you what it is. It's a little slow. I didn't want to refresh my my office computer back in Boston, just in case I had a little problem. And it's one more day to go, and everything's been working out well, so I didn't want to mess around. 90.42 was the low on the 5th of April. It goes to peak A, peak B, peak C, and all I'm doing is identify those highs, and I'm giving them a letter. It's the only methodology that I know of that grades each successively higher peak. It's the waveform that never sleeps, and it goes to where? It goes to a peak D. And what I was demonstrating, especially to people who had never actually done much in the way of the ChapmanWave, or even had just known about it a little bit, but hadn't been really aware of all the nuances, 94.55, that was yesterday, and the IWM makes peak D and it plummets. Right now it's pulling back, but it's holding at the, I believe it's a 20-period exponential moving average in the 120-minute chart. Hit resistance in the daily chart of the falling axe formation, but it's only peak C in the weekly, and I believe it will go to a D. I believe it will go to a D at this particular point. Now look at this. I made it so easy for those people who are not used to the visual aspect of ChapmanWave. We're going to use this big arrow. Let's see what happens here. Okay, here's a little bit of fun. See that big arrow? Look at the 9-period exponential, the differential of the MACD. Look how beautiful. Once it crossed positively, look how beautiful. And then it makes a ChapmanWave squash pattern. This is the IWM, the Russell 2000 ETF, iShares. And then it goes higher, and it pulls back to D. Yet the MACD is still very good, strong, and the stochastic is at 81%. That's on the 120-minute chart. So now I'm going to go to, I just want to demonstrate that. I don't want to get off that particular chart until I discuss it. I know people always look at the charts and say, what is that? What is that? So now the WFM is what we're looking at, about to look at. There it is. So this is peak A, peak B, just above the 200-period moving average in the 120-minute chart. The question was on the monthly. So I'm just going to work my way through. The 120-minute chart bounced for the first time to the 120-minute chart and has pulled back. Oh, Ben is online. Hi, Ben. How are you?
Hey, Basil. Great. How are you doing?
I'm doing well. Thank you.
I just wanted to say hi and doing a great job. And unfortunately, I can't stay on, but I greatly appreciate it if you take a look at the monthly and weekly on Whole Foods.
Okay, absolutely. So just in case you have to depart, I think it's a great call because this is one of those very important ones that I've been talking about that has the potential for a hat trick top, right? So
yeah, I was looking at the monthly and the weekly, and I could totally see why you were looking at it from a short standpoint. So just wanted to get another clarification.
Okay, so yes, we are short Whole Foods market. Have what I call the half a position. It's a partial position, and one of the reasons was I would want to add to it if our buy stop is I would go a very tight buy stop. A tight buy stop would imply that the stock itself has the potential just right as it was 2 days ago. It had the potential to pop, which is exactly what we wanted. So we got the very strong bounce. And that bounce was very important. Why? Because it gave me a sense of whether it's going to be able to touch the 88.15 level, which is the 200-period exponential moving average. If it's able to do that, this is Whole Foods market, WFM, then that's going to say to me, and I'm a little slow on my computer here. I'm using one hand. I got this. I didn't want to refresh or anything like that. We'll handle it. It's not a big deal. It'll be there in a moment. Well, I hope it'll be there in a moment. Yoo-hoo! Got to get that. I guess I'm having, because it's linked to my computer back in the office 3,000 miles away, I didn't want to shut it down and restart it this morning just in case I couldn't get a restart for any reason. So it's a little slow because normally I do that every day to be able to refresh it and to therefore avoid any of those problems of suddenly shutting down on me, which is, I don't like that. So let me do this. Here's the monthly chart. I try to expand this. I'm not able to do it right now. The monthly chart has just been spectacular. It's walked. You see this black line? This is something else we spoke about on Wednesday night. It's so important in the ChapmanWave methodology that I'm very strict about sticking to my rules. And the rule is that if there are certain moving averages, certain techniques, certain tools, certain parts of the methodology, I can hear the break coming up, that are working, you stay with that as long as you can. And the weekly chart has been underneath the 9-period moving average. And the monthly has been above until now. I'll be right back. We talk about Whole Foods market, a fantastic stock, and I'll be right back. This is the Tiger Technicians Hour, 877-927-6648. Let's take your call.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, everybody. We're back. Basil Chapman, Tiger Technicians Hour, and the Dow's trying to come back. I don't have a signal yet that says that we should be going deeply. I think we're getting really close to that kind of a pullback, but I just don't believe we're there yet. Now, the day is young, could be right off the wall, but my technical indicators usually give a great heads up, and so far, they are saying there is still residual buying, and that we are getting closer, but it isn't there yet. So we're going to watch this closely. We're looking at Whole Foods Market, world's largest organic food products. It's down. It is down 14 cents. It's holding really well here at 87.26, being beaten down from the 99.86 high to the most recent low by just under 82. Now, what's really interesting about this pattern, these are ChapmanWave techniques, and these are the things that we discuss in my Master Trader series whenever I give one. Oh, we spent a lot of time just, a lot of technical analysis is the visual identification of markers that over the time that you practice and practice, like a musical instrument, you don't in the middle of a concert, turn the page to the notation on how to finger the left finger G sharp on the clarinet in the middle of a passage, because at that point, everything is just, the nerve endings are right there. The memory, the muscle memory, the visual, the everything is right there. So that's what you practice, and I love to do it all the way through the day. Whenever, even if I'm doing the show, I'm constantly notating to get practice in that, to look at these different patterns. I must do every day. I must do at least, I'd say a minimum of 50 to maybe even 100 between the 2-minute charts, the long term, whatever it is, over and over and practicing these techniques. So there are a couple of techniques here. The 9-period moving average, that's one of them. That black line, and of course I've got a webinar that I gave on moving averages that I consider to be a really important part of my Sears and Roebuck huge toolbox. But I was to talk about different candles. We had a silent doji just before the top at 99.86. There was a round number high the following month at 97. All these are keys, and then it goes underneath the 9-period moving average. But there was a wide-legged doji in the second month. So this is talking about the high was, I'm a little slow, I'll give it to you in a second. The high was in October at 99.86. The following month of November, you get a high bar of move over, please, thank you, of 97, a low of 85.70. Following month, it's still, and that's a wide-legged doji. And my rule of thumb with wide-legged dojis is that the body of the candle, whether you're going to go up or whether you're going to go down, is going to be retested. Just visit it, even if it's for a split second at some point. So it gives you time to get your position. And I held off. And then finally, I did go short on a very nice bounce the other day from the low, just under 82. We waited for that really nice bounce. And I've got a really tight stop, a buy stop. Why? Because this has been a fund manager's favorite stock for so long that they are still wanting to get into it. I can see it. But if you look at the relative strength, which gave a very early incorrect signal, but a heads-up signal, a yellow light signal. And then if you look at my other indicators, which gave confirmation of that later on, and yet the price held up until the 9-period moving differential in the MACD pulled back, now you're looking at something completely different. What you're looking at is that 9-period exponential moving average. Do you realize that when Whole Foods broke above, back in, I'm going to press the key to see if I can get it without too much delay. Back in 2009, when the 9-period differential was pierced on the upside, in April of 2009 to $18.89. Since then, 3 months ago, this is going to be hard to believe, but it was 3 months ago that WFM Whole Foods market closed underneath the 9-period moving average, exponential moving average, for the first time. Now, what normally happens is I expect it to come down. I expect it to just briefly go above the 9 EMA, possibly make another dreaded H. Those H patterns, I'm actually going to stop calling them dreaded H's because the implication for everybody is it's a bad thing, but in fact it's a good thing if it holds and it's a bad thing if it doesn't, so I want it to be neutral and just call it an H pattern. And it's broken below the left side of the H pattern. So this, to me, is a counter-trend bounce. But it's holding up pretty well. It's down only 8 cents today. And that says it might need a little bit more. That's why I wanted a half position, thinking that under the different circumstances, if it holds, I might add to it and just raise the buy stop in that initial position. Or if it breaks down, I might add to it. Or if I'm taken out before that, I'll just wait. I'll be right back. 877-927-6648 is the number to call. So we'll finish the weekly chart, and I'll talk about Whole Foods when we get back again.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Ignitions Hour. And let's see if I can do this real quickly. Just do the numbers because it is very important because gold is down 66 now. Yep, 66. The Dow is down 44, holding pretty well considering. The S&P is down 9, and that says that the 500 stocks are doing a lot worse than just the mere 30. And the comp index is down 21. But you've got gold down 66. So let me just finish up here for the moment on WFM, which is Whole Foods Market. I believe this is a counter-trend bounce that's occurring right now. Yep, there's an engulfing candle to a certain extent on the weekly chart. It's not a technique I'm impressed with, except for one thing. When I get an engulfing candle that is at the same moment that there's a potential for a really strong buy signal to buy mode, the bar that makes the low bar cannot also be the high bar. If after that there's a lower high bar, and then it looks like you're starting a brand new buy signal, that becomes a really powerful move. But just as a single bar like this, until I get more evidence of upside action in Whole Foods, I'm just saying that this is a bounce. Now, what's really important about the monthly chart is it's held very well for the 1, 2, 3, 4, 5 for the 6 months since it made its top, 7 months altogether with that top. But and also, it hasn't made a lower low. It hasn't taken out the 79 low that's very important from way back. I think it was July. I don't want to press any buttons right now of last year. So I'm looking at this and I'm saying, okay, you could be in a trading range. As I say, fund managers are looking at this and still saying, hey, it's still a great company, the best of the best. I'm suspecting that the cup formation that failed from in the weekly chart, at some point within 2 weeks, I'd say 3 weeks at the most, we're going to have a test of the 81 to 79 level, and it's at 87.31. If it makes an arch formation, that's one thing. I'm totally wrong. If Whole Foods is able to get back to the 92.30, 92.80 area and hold there for an entire month's close, that would be, say, the whole month of April, then I'm going to say, okay, high-level consolidation is still a great-looking stock, and I'm just going to treat it as something that possibly makes a hat-trick top in the monthly, but it isn't one of the very, very serious ones. But the MACD and stochastic are saying to me, it's going up, and it's, when people look at volume and they say there's no fuel, I'm looking at this and saying there's no internal combustion. There is no momentum to the upside at all. It's actually to the downside. So the price cannot push against that for too long. If the tide is going out, a piece of driftwood goes out with it, and I'm treating the price now as if it's driftwood. So I'm watching it real closely. So what do you want to see? You want to see a break underneath 85.50 at 87.32. You want to see it fairly quickly by Tuesday afternoon, Wednesday morning of next week, number one. Number two is if it's going to go higher, it needs to treat the 87.50 to 88.15 level, that's the 200-period moving average, as a support level and try to push to 89.50 and 90. So we're going to be watching that. Now let's go to gold. The GLD, and I'm very upset about this because we actually had a long position in like a mini GLD, and I had a chance to get out at a break even, and I didn't quite do my homework. I was a little tired, and I didn't do my homework the day before yesterday. So when I looked at it and it was holding, I should have just immediately said, let's get out because it failed to go higher, and it was that M pattern that I was looking at. And it's just done that. I'll use the GLD for the moment because most people look at the GLD. So look at this. The monthly chart plunged underneath 148.53, and it says 144.91. I've been talking about this for ages, and it teaches me a lesson because you should not be playing a counter trend to the major tide. How much time did I spend talking about this the other night? I talked about it on the show. Big mistake on my part. But, we only took maybe a 1.5% to 2% loss. That could have been a little bit of a gain or break. Even that was very, very negligent on my part. And I should have been able to switch to the DZZ. That was the main thing to do. And I'm just not quick enough right now in my charting. I'm a little behind. I could switch to another platform, but I don't want to do anything right now. So we're looking at gold breaking underneath in the weekly chart, underneath at 148.53. I've got a rectangle, and it's going towards the lower part of the rectangle, which is around about the 143s. I've been talking about this for I don't know how long, that gold is in a bear market. How could you go long when it was in a bear market? Chapman? Anyway. So I always show the charts of when you identify a trend, always go with the trend. Even if it's a counter-trend move, you want to do it real quickly. You get in, you get out, because you want to be trading the major trend. Why? Because when that driftwood, when the tide is going out, no matter what happens, that driftwood will keep going away from the shore. If the tide is coming in, that piece of driftwood always comes back to the shore. It saves you if you're in the right position of the trend, and if you time it. How many times at Apple could you buy it at the exact high of the monthly chart and still the next month it was higher than that because the tide was going up, even though you bought at the highs? So I'm scolding myself like I do my callers when they call me and they say a stock is, and I can hear by their voices, come back to even after they were down a lot. And I say, you've got to reassess. Well, I'm reassessing. So the GLD, very, very poor action. And I've been talking about, can't believe it. I've been talking about it going down, and whoosh, on a Friday. So often on a Friday it does that. So now what I want to do is just to show you something. This is a real slow kind of, okay, here we go. I'm going to grab it right there, slow. Got to learn to count about 10 seconds. Did I do the right thing? No, I didn't do the right thing again. Oh, man. All right, grab the chart right there, stretch it across, going across. There it is. 10. One of those days. All right. So, let me just change this to the GCM 113. That's the gold contract itself, so you can see exactly what I was talking about. The H pattern goes to an M pattern, and the M pattern at some point breaks the left side low. That's what you've got to keep in mind, and that's exactly what it's done right now. Come on, anybody home? There you go. Now, grab it, slowly drag it across, I think. Oh, I've got to count a couple of seconds, I guess. Try it again. Click. Sorry for the delay, but the delay is in my software, and I do not. Okay, I've got it. I've grabbed it. I don't have it. I've missed it again. This is very upsetting. Okay, make it blue. It's blue. Grab it right there. Painful. You think it's painful for you? It's painful for me. I've got it. I'm dragging it once. Missed it. Oh, I did. I got it. Okay. It's coming across. I'm just trying to grab this. I always think of tugboats. When I was a kid, my father used to take me out on a Sunday afternoon to go check the lumber that was coming in from Scandinavian countries, because he had a factory, a woodworking factory, and we would go to the Cape Town docks, and we would go and we'd see if the lumber had arrived and all that, and then we would often go on a little tugboat, and the tugboat would push out because it was a very deep harbor, but it had a narrow entrance, so the big ships used to come in, and the tugboat used to have to go and pull them in and push them out. And we used to go, and whenever I do this, I think of that little tugboat and those huge ocean liners, and I'm just waiting there. I've got it. Now I'm going to grab it across. It's not going to work. Okay, doesn't matter. So gold, you can see in the weekly chart, is sitting now right on the 200 period exponential moving average in the weekly chart. I don't know how long I've been talking about it, going down to that 1490s area, and there it is. Gold at this particular point, down 66, is at 14,098, sitting exactly. It's just pierced at a fraction, but 1498 is the 200-period exponential moving average. And what's upsetting here is that there were all signs that the fast-moving average could not cross positive, that the 9-period moving average, that black line in the weekly chart, was very strong resistance. Scolding myself. And what I think is very important about it is that in looking at the charts, if the commodities are coming down, and I'm going to try to go to the HG contract, that is the copper contract, then I've got to take this decline right now quite seriously, if not right at this moment, very, very soon. Because what it's saying is HGM, is that copper, and I've been talking about this for a couple of years now, that the rally in copper earlier was really a sign to say that economic recovery was returning. The fact that copper has been acting so weak for quite a while now, I've got an HGM, I don't think that's the contract that we're looking at. HG, I think let's go to K for now. HGK, got it. Here we are, waiting for it. Comes back, and there it is. So, a single leg A up in the daily chart. You got the H to an M pattern in the weekly chart. The low that we're looking at is around about 3.3. I think it's 3.31 something. Left side low is coming up right now. Yep, 3.3100. That was made the week of the 8th of June of last year. And right now we're looking at a low of where can I find it? 3.3270. So this is getting real close to testing in the H pattern that goes to an M pattern, a break below key support in high-grade copper. So I got to those things. Now, something else that's very important to be looking at is this particular stage. How is the IYT, which is the transportation index, the iShares, how they're acting? And the IYT at this particular point is at 108.99. It made a doji high peak. I'm calling it a peak E/B. Still going to call it that. in the weekly chart, and the monthly chart still looks really, really strong. So it's holding quite well. It's down 58 cents at down 0.53, and that's about the same percent as the Dow. Maybe the Dow is down 0.6 something, and that's going to be very important to monitor. So far, the peak that was made in the transportation index, the iShares, has given back quite a bit, but not after the huge gain from the 85 area, most recent low of 85, back in, I think it was November, to the recent high in the 100, I think 112, 113 area. So now this is very important because it's holding very well above the 9-period moving average. The candle that we're going to have to monitor really carefully is last week's candle in the weekly chart. Why? Because it made a ChapmanWave Roman candle. If it starts to trade into the 100, and I'm going to try to press the key. Here we go. If it tries to, if it at any point goes underneath 106, if it breaks 106, and it's a 109.06 right now, at any time in the next 2 weeks, it'll probably go all the way down to the 104s, breaking the low of that particular wick. So I needed to go through that, and now let's do some other things. We're going to look at the QQQ. And the QQQ series is this is the trading vehicle for the NDX 100. It's trading at 69.60. It's down 0.39, down 0.56%, holding very nicely after single leg A. But I'm impressed with I was impressed with the Qs because I don't know whether this has to be a new leg A. I can't call it anything else in the ChapmanWave because of what happened earlier. At least I believe I have to call it a leg A. If that's the case, then there should be some kind of high-level consolidation going into Monday and Tuesday. And then as long as it holds well and holds above 69, I don't even want to see 69.13, which is the 9-period moving average. I'm really saying it needs to hold above 69. What's the low today so far? 69.41. I would say it mustn't close under 69.41. So the day is young. Let's see what happens. But I've got a pattern here. Usually I can just draw these things in a split second. Today is a little slow, and as I said, I just did not want to refresh and to restart my office computer back in Boston, actually Newton, Massachusetts. I didn't want to do that just in case there was a problem. Everything had been working so smoothly. So there's this pattern here that I call there's a declining, expanding cone formation or a wedge formation. And that says if next week by Tuesday afternoon, Wednesday afternoon, the Qs are back above 70.20, then the most recent high of, I think it was 70.17. If 70.17, you go to 70.18, that starts leg B up. If I see that with the stochastic still in the 84% area and the MACD still expanding, the Qs will be going higher, and they're going to test 70.58, the major high of last year with a doji candle high at PE in the weekly chart. Now, this is a monthly chart, and this to me is just, it is so fascinating. It is so visually impressive. Look at this. You've got a rising wedge formation. Look at the ChapmanWave inside track. That's the technique that I use. And that technique says, when you get into this area here where the red line is, you've got to be careful because it needs to decisively break the green line. Slightly rising trend line, long-term trend line, with a much sharper rising inside track, higher lows, that say if you break to the upside of this wedge formation, that's going to be very positive. But until you get there, you've got to be a little bit careful to say, hey, how does it handle maybe leg D at 70.59 in the monthly chart? I'll be right back. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to get your calls.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Now, this is very important as far as I'm concerned. The New York Stock Exchange is acting very well in the monthly chart. The stochastics at 95%. The MACD still expanding. The 9-period moving average is 8,663. Has a high of just yesterday of in the 9,250s. And that's leg C. I'm impressed because of the way I handle, the way I use doji candles. I'm impressed with the action so far this month. What's going to be very important is for it to try its very best to get to the 96, not all-time highs, but at least to the 96.87 level in the spring, early summer period. And that's going to be very important for me because if it's able to get to that level, it's going to say, great, because when peak C comes in all the monthly charts, the Dow chart, the S&P, the New York Stock Exchange, the way it handles it, and I think it's going to be a pretty sharp decline. I think it's going to be something that's really scary, and I don't think it's right now. I think it's coming up a little later. and I'm only talking about between 3 to 5 sessions. If it's going to do that at all, that is based on daily charts, based on other things. It could happen. This could be the move, and this could be the very moment that we actually head down without even a bounce. But I don't. There's so much I'm looking at that it says it probably isn't right now. That if one is short and one's making money, you've got to treat these as take profits and do it again, take profits and do it again. And the most important thing that I've been looking at and talking about for a while is that for a very long time, this really has been a buy and hold market, as much as we don't want to believe it. In fact, almost all the stocks that we've had in my opening call, if I just held those darn things, they would be up double, triple, even more in some cases. So now we're starting to get to the point where you've got to start looking at certain sectors and say, they are becoming extremely overbought. And just for that, I'm going to take, let's just look at Celgene, SCLG, which has just been an incredible stock. And it's right now, I'm probably trading up again. Yep, there it is, Doji candle at 123. That last move from the 60s back in early, from the spring of last year to now, was a double. That is extraordinary. So I'm looking at, I bet I haven't got this updated. I used to have it updated. BBH, it's called, I think on BBH will go to. It's probably not going to come as an updated, notated chart. But, in fact, yep, there it is. Look at that beautiful formation. And that I can't remember. I think it was a split, actually. This is the market vectors biotech. If you go to the IBB, that's the NASDAQ. That is an extraordinary move, just a stealth move, because, it came out. This is leg E in the monthly with the stochastic at 95. So we're about to close out for the week. At least my show's about to close out for the week. Let me just say that there are certain sectors that I'm looking at that I believe are going to take quite a decline, and it's going to be, I don't know whether it's going to be slow, it's going to be quick, I just don't know yet. But I am looking at certain sectors being extremely overbought, but I'm looking at some of the laggards. And I believe the laggards, so the weekly chart is A, B, C, D. This is leg E up in the weekly. So I think that area is going to come down. But when the biotechs come back down, very often it coincides with another sector starting to move higher. So you've got to identify those sectors. And at this particular point, the sector I'm thinking of as the weakest that I'm going to be looking at in great detail in the next week and a half to 2 weeks is the XLF, the financials. How are they handling all this? What's happening? Do they have a potential to improve? Now, the New York Stock Exchange had a lot of the financials. That's the reason I think it's been lagging. So those are the assessments. And for my subscribers, I'm hoping I'm going to have time to do a much greater detailed study of the Dow for this next period ahead. So have a fantastic weekend. Have a fantastic week. And thanks for being here. Stay tuned. You've got Nico DeHarning, and this is, of course, all about health. And I just want you to have a great weekend. And